John Khuu, a resident of California, is charged by U.S. authorities of using cryptocurrency to launder $5.3 million in drug proceeds. Welcome to CryptoLink channel. If you love getting news and updates about cryptocurrency, join our community by subscribing to our channel. You can tap the bell icon to never miss our new videos. If you enjoy our channel, kindly like and share it with your friends. October 8, 2022. A tweet from CoinDesk stated, U.S. officials have charged a California resident with using #Bitcoin to launder $5.3 million in counterfeit drug proceeds, at Nicolest reports. John Khuu, a resident of California, was charged by U.S. authorities on Friday with conspiring to import a prohibited substance illegally and with conspiracy to conduct money laundering. It is claimed that Khuu is selling illegal drugs for Bitcoin. According to a news statement, Khuu was detained in August 2022 following grand juries in California and Texas delivered the indictments in the months of May and August, respectively. Khuu reportedly set up seller profiles on several dark web markets to start selling the phony medicines and other banned drugs in January 2020, based on one of the indictments. Although the indictment implied other cryptocurrencies could have been utilized, consumers typically used Bitcoin to buy these drugs. Khuu is also suspected of laundering the money through a financial institutions network, such as JP Morgan Chase, Citibank, Bank of America, and Wells Fargo. He allegedly opened many fraudulent accounts at various banks, according to the indictment. The rest of the indictment continues by listing many transactions Khuu is charged of carrying out as part of his endeavors to turn Bitcoin into cash. He apparently completed less than 500 transactions in altogether, selling 620 Bitcoins in total. Another court document made public on October 6 states that Khuu forfeited his right to a hearing regarding his detention. On the same date, October 8, 2022, Cointelegraph tweeted, "Crypto prices are falling, but why? More importantly, what will it take to reverse the downward trend?" On October 7, cryptocurrency prices are declining since Bitcoin was unable to lock in profits over the $20,500 mark. The price of Bitcoin has been stuck between $17,600 and $24,500 over the previous 115 days, and the price motion right now merely reflects trading in the bottom half of that range. The values of Ethereum and the majority of other coins are also reduced by single digits. The S&P 500, Dow, and Nasdaq are all down by 2.16%, 1.62%, and 3.03%, correspondingly, while the stock markets are experiencing a pullback. In general, the cryptocurrency market is following this trajectory. Investors are aware that cryptocurrencies are more volatile than the typical asset class, but this year's decline has been especially devastating. The price of Bitcoin dropped over the following 11 months to an unanticipated annual low of $17,600 after reaching a dizzying all-time high of $69,400. Investor confidence is now low as they continue to steer clear of risk and await to see if the Federal Reserve's existing monetary policy will reduce the consistently high inflation in the U.S. In contrast to the Fed's goal of slowing the economy in order to control inflation, recent statistics on the U.S. labor market reveal that the market generated more employment than expected for the seventh consecutive month. The likelihood that the Fed will continue raising interest rates by 0.75% is increased by the strengthening of the labor market, as well as murmurings of a potential 1% increase soon. Let's look more closely at three causes for the continued decline of cryptocurrency values in 2022. Rate increases from the Federal Reserve. Increased interest rates make borrowing money more costly for both individuals and companies. This produces a domino effect that drives up the cost of doing business, the price of products and services, the manufacturing cost, the labor costs, and finally, the cost of almost everything. The main driver of the United States Federal Reserve's rise in interest rates is the country's high, persistent inflation. Additionally, since March 2022, when rate increases started, Bitcoin and the larger cryptocurrency marketplace have been in a decline. Risk assets typically communicate or move quicker than stocks whenever monetary policy or measures that assess the sustainability of the economy change. The Fed began indicating that it will eventually raise the interest rate in 2021, and data suggests that by December of that year, the price of Bitcoin had significantly recovered. Risky investments like Bitcoin and altcoins might once more be the canaries in the coal mine by representing a return of risk-on investor mentality if inflation starts to decline, the economy's overall health improves, or the Fed starts to suggest a pivot in its existing monetary policy. The ongoing risk of regulation. There is a long history of conflict between the cryptocurrency market and regulators, either as a result of a variety of misunderstandings or skepticism over the real-world applications of digital assets. Different nations and jurisdictions have a variety of inconsistent regulations on how cryptocurrencies are classed as assets and specifically what makes a lawful payment system, because there is no operational approach for regulating the cryptocurrency market. The absence of clarity in this field hinders innovation and expansion within the industry, and many observers think that unless more broadly accepted and understood legal frameworks are implemented, cryptocurrencies will not become mainstream. Ponzi schemes and scams led to liquidations and repeated blows to investor trust. Cryptocurrency prices fell precipitously during 2022 as a result of scams, Ponzi schemes, and extreme market instability. Since there is no supervision, the cryptocurrency sector is new, and the market is comparatively insignificant compared to equity markets. Bad news and occurrences that disrupt market liquidity can have devastating impacts. The collapse of Celsius Network and Terra's Luna, the misappropriation of leverage and user assets by Three Arrows Capital, or 3AC, and the downfall of Terra were attributed to blame for subsequent drops in asset values in the cryptocurrency market. Currently, Bitcoin has the highest market capitalization within the industry, and traditionally, altcoin values have tended to move in tandem with the price of Bitcoin. Bitcoin's price rapidly corrected when the Terra and Luna ecosystem imploded on itself as a result of several Terra liquidations, and investor confidence plummeted. The fall of Voyager, 3AC, and Celsius had a similar effect, but to a far wider extent, wiping out tens of billions in protocol and investor assets. What to anticipate for the remaining period in 2022 to 2023? The Fed's ability to increase, pause, or cut interest rates will remain to exert a direct influence on the price of Bitcoin, Ethereum, and other cryptocurrencies. Due to the fact that factors influencing declining prices in the cryptocurrency industry are driven by Fed policy. Investors' risk tolerance is expected to stay subdued in the meantime, so aspiring cryptocurrency traders may want to hold off until there are indications that U.S. inflation has peaked, or the Federal Reserve starts employing language that suggests a policy change. That's it for our today's video. So, what can you say about the news? Let us know about it in the comments section down below. Thanks for tuning in to CryptoLink. We are always excited to provide you with news and updates about cryptocurrency, and if you like this video, please click the like button. See you on the next one.